Welcome to the Real Estate Deep Dive with Paul D. Garrison from JP and Associate Realtors. Today we're going to be talking about two topics that have been in the news quite a bit: inflation and housing. More specifically, homeownership as a hedge against inflation. So let's start out with a quote from Ben Carlson. He's a portfolio manager, wealth management. Housing is one of the most effective hedges against inflation. Investing is not just about building wealth, it's also about not destroying wealth. Even a small return above the rate of inflation over the long term on a place you would like to live in anyway is a pretty sweet deal. Let's take a quick look at why Ben likes real estate as an effective hedge against inflation. First off, everyone has to live somewhere. Now we're going to talk about rents in just a minute, but one of the reasons real estate is so attractive is that it often has a fixed cost associated. For example, if you purchase a home today with a fixed rate mortgage around 3.1%, that remains the same going forward. So as inflation raises prices on other goods, it also impacts home values and causes them to rise as well. So as Ben pointed out, as long as the home price appreciation is higher than your fixed costs, and you're meeting your need for a place to live, you're coming out ahead. So as I mentioned, real estate, like other goods, is affected by inflation as well. This is actually noted in this quote by Mark Cousin, financial writer for Investopedia. Real estate is one of the time-honored inflation hedges. It's a tangible asset, and those tend to hold their value when inflation reigns, unlike paper assets. More specifically, as prices rise, so do property values. So in an inflationary period, you don't want to step off the merry-go-round, so to speak. So you don't want to be in cash or other assets like that. You want to be in tangible assets that are going to appreciate in value. So some of you have been thinking about selling and waiting until things cool down a bit. I would not advise that because home prices are projected to continue to appreciate. Let's take a look at home prices as compared to inflation or consumer price increases over each decade going all the way back to the 70s. The blue is the inflation rate and the green being the average annual home price appreciation. Let's look at the 70s. The inflation rate was at 7.1%, and the average home price appreciation was at 9.9%. So homes outperformed inflation. Now let's look at the 80s. Pretty close here. Inflation at 5.6%, homes at 5.5%. So inflation just slightly higher than home appreciation. In the 90s, home prices outperformed inflation, and in the 2000s, even with the housing crisis, inflation only slightly outperformed home price appreciation. Then we see significant differences in the 2010s and 20s, with homes dramatically outperforming inflation. Take a look at the difference in 2021. I'm sure some of you are thinking that, well, yes, my principal and interest are fixed with my mortgage, but my payment keeps going up each year. Well, that's because of your insurance and your taxes. As they say, there are only two things in this world that are inevitable: death and taxes. This fact is noted in this quote by James Royal, senior wealth management reporter for Bankrate. A fixed rate mortgage allows you to maintain the biggest portion of your housing expense at the same payment. Sure, property taxes will rise and other expenses may creep up, but your monthly housing payment remains the same. That's certainly not the case if you're renting. So James makes an interesting point about renting. So let's take a look at how renting has performed against the core inflation rate. So the core inflation rate is in blue, and the average rental price appreciation since 1973 is in green. So as we look at this chart, we can see that the rent price appreciation rate tends to be greater than the core inflation rate. There are a few points where it dips down, but as a whole, it tends to be higher. Due to different life circumstances, there are several reasons why renting may be a good decision, but if your reason for renting is to give the market time to cool off for a bit, keep in mind that these forces we've discussed, along with the projected rise in interest rates, will be working against you. To help hit this point home a little bit better, let's take a look at this quote from Natalie Campisi at Forbes. Homeowners are shielded from mounting rental prices because their cost is fixed. Regardless of what's happening in the market, tangible assets like real estate get more valuable over time, which makes buying a home a good way to spend your money during inflationary time. Or this last quote from Ali Wolf, the chief economist at Zonda. If you have cash and are expecting inflation, you want to think through where you can put your money so that it does not lose value. Housing is commonly looked at as a good inflation hedge, especially with interest rates so low. Many of the metrics and numbers in this presentation are based off of the national real estate market. However, local areas can vary. Please give me a call and we can discuss your situation. Have questions about your specific needs or location, please contact me at 214-683-8188 or paul@pauldgarrison.com. Want more information about the housing market and related issues? Be sure and check out my blog at www.pauldgarrison.com. Thank you for your time. Please take a moment to visit our website at www.pauldgarrison.com.